Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 1st of October 2021 and we're producing our Friday morning gold and silver price update, forecast and news. The last 24 hours have seen both gold and silver stage a modest recovery, pushing prices above some key resistance levels. However, economic data due out today could have further impact on prices. Now, before we take a look, a quick shout out to 3 videos produced since Wednesday. Our Thursday morning gold and silver update and forecast, where we gave our views as to what's likely to happen after the initial fall in silver prices, particularly on Wednesday. And then, that very video, silver crashes below $21.50, why and what next? And why buy and own gold? An interesting perspective. And we've placed links to all of these below. Let's now take a look at today's news. Welcome to Illuminati Silver. It's Friday, the 1st of October 2021, 09:02 AM GMT +1. Good morning. It's a damp but tranquil day outside. Tranquil in the sense that there is literally no wind, but damp because we've had a little precipitation. But it's held off for now. And holding off for now is something we could not afford to do in the United Kingdom as far as our power supplies were concerned, something that we have been discussing almost every day for the past week or so. And the good news is that the power-starved United Kingdom gets its first undersea supply from Norway. So let's take a quick look at that. The first commercial flows of renewable electricity between Norway and the UK are set to start early on Friday, providing some relief to Britain as it grapples with an energy crisis that's cascading through the economy and putting suppliers out of business. National Grids PLC's €1.6 billion, the equivalent of $1.9 billion, North Sea Link is meant to be a two-way cable, but the huge premium for UK power this autumn ensures that the flow will go in one direction initially. Supply will be limited to about half of the interconnector's 1,400 megawatt capacity, with plans to gradually increase to full output by the start of next year. A global energy shortage triggered record power prices in the UK last month and forced at least 10 small suppliers to shut down. The country's risk of winter blackouts increased when a subsea connector with France was knocked out by a fire. The Norwegian link will be a key part of Britain's effort to reach net zero targets, avoiding 23 million tonnes of carbon emissions by 2030 and eventually powering as many as 1.4 million homes, National Grid said in a statement. So there we have it. Now, what was interesting is that we have seen in recent days on YouTube numerous adverts coming out showing that solar panels are now 30% cheaper today than they were a number of years ago. And maybe, just maybe, this may provide the sort of impetus, this threat may provide the impetus for national governments around the world to push solar power even harder than they have done so far. But what also attracted our news really is this: silicon's 300% surge throws another price shock at the world, and we'll tell you why. So many of our listeners complain that silver is in short supply. You might find it difficult to get some coins, that's true. But from our speaking to dealers, and when we say dealers we mean large dealers, wholesalers in other words, they don't really have a great difficulty getting whatever they want. But what is in short supply is silicon. A metal made from the second most abundant element on Earth has become scarce, threatening everything from car parts to computer chips and throwing up another hurdle for the world economy. The shortage in silicon metal, sparked by a production cut in China, has sent prices up 300% in less than 2 months. It's the latest in a litany of disruptions, from snarled supply chains to a power crunch, that are creating a destructive mix for companies and consumers. The silicon issue also captures how the global energy crisis is cascading through economies in multiple ways. The slashing of output in China, far and away the world's biggest silicon producer, is the result of efforts to reduce power consumption. Silicon makes up 28% of the Earth's crust by weight, is one of mankind's most diverse building blocks. It's used in everything from computer chips and concrete to glass and car parts. It can be purified into the ultra-conductive metal that helps convert sunlight into electricity in solar panels. So there goes my idea, doesn't it, about governments encouraging solar power panel use if the price of silicon rises 300%. And it's the raw material for silicon, a water and heat resistant compound used widely in medical implants, cork deodorants, oven mitts, and more. So that is where the true shortage lies currently. BBC News. Millions of households face higher energy bills. Not surprising. Pub chain Wetherspoons reports record loss. Why? The coronavirus restrictions, of course. Restaurants warn prices will rise due to VAT hike. The increased sales tax will be passed on to customers, say restaurant and bar bosses. And Congress, and we look at this now, narrowly averts US government shutdown. Yes, a vote on President Biden's massive $1 trillion infrastructure bill was postponed, but Congress voted to extend the debt ceiling. So all this concern about the company going into collapse, the country going into collapse, I should say, has been averted. But then most of us know that that was going to happen anyway. US deal paved way for Afghan collapse, according to the generals, and Facebook grilled over mental health impact on kids. Forgive me, just don't let your kids use Facebook. However, I'm not here to protect Facebook because we all know some of the exploitative methods they adopt. Reuters, China gorges on American grain-fed beef amid shrinking supplies from down under. So when you bear in mind that America always seems to be in conflict with China, well, you're selling them your beef. We don't blame you if you make money. Dollar index, 94.28, up 0.05 on the last 24 hours, although it has been higher, as high as 94.5. Oil prices marginally down 28 cents for WTI crude at 74.75 and down 31 cents for Brent crude at $78. Thankfully keeping below that $80 mark, as some were predicting $90 or $100 oil, and we even saw actually and headlines saying $200 oil possible. Equity markets in the US hit yesterday between 0.5% down for the Nasdaq and 1.5% down for the Dow. Asia overnight down 2% broadly, and UK markets and European markets this morning down about 0.75%. So we're seeing this gradual fall in equity prices. Had the $1 trillion bill passed, we might have seen or might see equity markets move up today. Might still happen because the debt crisis limit has been averted, but the equity markets need that tailwind of the infrastructure bill to get it going again. And if that does happen, you can rest assured that the small percentage that we have in equities in our pension fund will be eliminated. Let's look at what's happening on the news front. Yesterday, initial jobless claims came in slightly disappointing, coming in at 362,000 compared with 335 expectations. However, the continuing jobless claims figure, which some would argue is slightly more important, has actually reduced from 2.82 million to 2.8 million. So we've got a slightly mixed bag there. Real gross domestic product was increased from 6.6% to 6.7% for quarter 2, but the Chicago PMI were disappointing at 64.7 against expectations of 65, which was lower than August anyway at 66.8, which just goes to show you cannot take the economy for granted at the moment, because we are getting a mixed bag of events, but most of them slightly to the negative. Now, today is the crucial day. We have nominal personal income, nominal consumer spending, core inflation, market and ISM manufacturing PMIs, construction spending, and consumer sentiment index. So this should have the greatest effect, although on gold and silver prices yesterday had the greatest effect. Why do we say that? Because we have seen gold, even as of this morning, over the last 24 hours, rise $20. And yes, we are now above that crucial area which has served as both resistance and support of $1,750, which is the level we are most comfortable with, to be frank. Gold did go as high as 1764, it's been as low as 1722, and it's currently 1753, which it seems to be the sort of level gold likes to meander around. Silver also staged a good recovery, up 48 cents at 22.19, now breaking that 22 resistance barrier, and hopefully will act as support, though we're not totally convinced yet. But having said that, bearing in mind it has recovered a little, and it's against the backdrop of the infrastructure bill not being passed, which will, when it does, provide a slight tailwind for silver again, hopefully, we can see it at 22.19. Now, tomorrow in our weekly update, we'll give more comprehensive figures with various forms of resistances and support levels according to the technical matrices. Cryptocurrencies up 3% over the last 24 hours, with a market cap now of 1.97 trillion. It was only a couple of days ago that it was 1.88. And a quick shout out to our videos yesterday, where we produced our Thursday morning update, and the day before, silver crashes below 2150, why and what next? And also one that we haven't really had that many views on, why buy and own gold? And it was an interesting perspective, where someone says that gold is really bought in case of a war. Do log into that one, and we've put a link below. Where's it going today? Let's see what the economic data is. We've already had a significant gain. We suspect gold and silver will meander until that economic or those economic reports come out. And so meanwhile, give us a thumbs up, thumbs down, subscribe, press the bell sign, and tune in for our weekly update tomorrow. Have a great Friday, everyone. Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.